The following program is a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com or search for Options Insider Radio in iTunes. And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block. With your host, Mark Longo from theoptionsinsider.com and co-hosts Mike Tusaw from KnowYourOptionsInc.com and Mark Sebastian from OptionPit.com. The Option Block is brought to you by Options Express. Don't spend time worrying about your broker. At Options Express, security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets, established financial stability. Options Express lets you trade with confidence. Stocks, options, and futures, all in one account. Trade with a specialist. Visit optionsexpress.com/OXradio to open your free account. Options Express is a member of FINRA, SIPC, and NFA.
All right, and welcome to the Option Block, your bi-weekly source for all things options related. My name is Mark Longo from the optionsinsider.com, as well as the old Options Insider Radio Network, and I am joined today on the old all-star panel by a returning regular as well as a returning newcomer. And we'll start with that regular. He is, of course, the Rock Lobster himself, a.k.a. the man from Maine, a.k.a. Andrew Giovinazzi of optionpit.com. Andrew, welcome back to the show, sir.
Thank you. I had to put my lobster down. It was fighting me.
It was far too succulent and delicious. It was distracting you from the show.
Exactly. It was screaming to buy juice, and I just told him to wait.
Tell them you have to do stuff after you buy that juice, too.
Exactly. I love the, Tusaw with the do stuff. But yes, I'm watching the market go nowhere. Trying to figure out if we need to go back down, 400, 400 points in the S&P or something like that.
400 points in the S&P, wow. That'd be a...
Oh, that's the Dow. What am I talking about?
That'd be quite the dark day indeed.
That would be... that's happened before, but I know. No. Down about, 60 handles or so in the SPX. So we'll see if we can get back down there again.
Just to clarify, Andrew Giovinazzi of optionpit.com is calling for the apocalypse, essentially. In financial terms, anyway. I am fading this rally just a little bit, and until after next week, then I won't fade them as much. But I am going to have to fade it a little bit right now. It's that old saying we used to have on the floor. You could go out and sell the, let's say, SPX 600 puts all day long, or the 400, because they don't really matter. Because if you get down there's a whole lot of other things going wrong that are going to acquire your attention. No one's going to be calling in those S&P 400 puts. So there you go. Sell to your heart's content, listeners. Of course, 400 handles, maybe that's not enough. Maybe you got to sell like the 400 puts. Get us a nice 800 handle drop or so. Maybe.
Yeah. You just go out and you sell the 400 puts in August or something, or September. Some quarterly way out there that you just
there you go. There you go. Lots of juice in those. That's our recommendation for the day, listeners. Is go out there and blast AUG 400 SPX puts.
But wait till after the Greek election. Just wait.
That's true. You might get a little extra bang for the buck.
And it's not squeaking. I just want to let you know.
There you go. A lovely thing. All of our listeners right now are silently thanking you, Mr. Rock Lobster. And next up on our old all-star panel here is the returning newcomer I mentioned earlier. He joined us for the first time on Tuesday's show and did a bang-up job for his opening initiation here on the old option block. So welcome back to the show, Mr. Sean Fitzgerald, the major domo over there at the trading desk at Options Express. Sean, welcome back to the show.
Thank you very much. Glad to be back. Looking at this SPX right now, it's pretty similar to the last show. We're looking at a almost 0.00 close again.
Yes, twice in a row. What are the odds of that? We're really racking up the exciting market environments for our recording today. I think it must be you, Sean, because as soon as you came on the show, all of a sudden we're getting 0.0 twice in a row.
I do find interesting the closing price of 1314.99. Did not want to get that 1315.
Couldn't do it. Didn't have the oomph. But no. With that oomph.
Is that the magic number, 1315?
That's it. That's when it all goes to hell in a handbasket. Once it hits that, then the bottom drops out and it turns around.
I'm just trying to
under.
Huh?
0.01 under of it. So we are at 1314, spot 99.
So we officially didn't hold it.
We could be seeing Bloodbath Part 2 tomorrow.
Uh-oh. I might want to change the recommendation. Listeners, buy those AUG 400 puts. We have a lot of red in store for us over the next couple of days.
Exactly. Well, we were wrong. Yeah, switch it around.
Sold. I meant buy them all. All right, and with that ridiculous notion, we're going to dive right into the trading block.
The trading block.
All right, and welcome to the trading block. This is, of course, the portion of the show where we highlight what was moving the markets, what was lighting up the old tape on the street today. And as Sean alluded to earlier, there certainly wasn't a heck of a lot really lighting up the old tape today. For the second time in a row, the probability of that being quite low, we closed with the S&P literally at 0.0, unched literally on the day again. So twice in a row, listeners. Of course, that belies the activity we actually saw in the market today. There was a little bit more of exuberance, shall we say, in the early part of the session, but then good old Big Ben came in. And as he is wont to do, he really stifled any enthusiasm that is going on in the broad market today with a lot of his essentially endless and essentially meaningless chatter for the most part. But just the duration of it and the sheer, I suppose you can call it, the sheer non-committal nature of it was enough to just spook the markets and send us essentially back to unched on the day. Everyone wanted to keep their powder dry while he was running off at the mouth. And, of course, at the end of the day, was that a bit harsh on that? Perhaps I'm just jaded from years of watching all these Fed reports and hearing
a little upset sounding there,
hearing nothing coming out of my favorite today, watching Bernanke talk today, was, of course, him saying that the most important thing on the domestic radar from an economic perspective, at least from his and the Fed's perspective, was, of course, the potential renewal or lack thereof of the tax cuts. Yet then he went on to say, of course, we have no opinion on whether that should be done, yes or no, of course. We're just saying that's the most important thing. So here's the Fed commenting on what they say is the most important economic issue of the day. And yet the Fed, who you think would have a relatively valuable opinion on that subject, as opposed to some random congressman who just wants to hold court for the cameras, they, of course, elicit no opinion whatsoever on that topic. When I think that actually might actually be warranted. What does the Fed think about perhaps extending the Fed tax cuts? Yay or nay? You know, that might be an interesting opinion to have, and yet they, of course, are non-committal as always, and even more so in an election year. So you really can't expect much from Big Ben and these type. For the rest of the year, I think they're pretty much, their hands are tied. They're not going to go too crazy in any one direction because then they're seen favoring one party or the other, and they certainly don't want to do that in a big election year. So what did you guys think?
They want to keep their jobs.
Exactly. So what did you guys think of Big and or Little Ben?
You know, if I will sit here and prattle for 2 seconds before my colleague there on Options Express, but I think the Fed and the ECB have the same problem. I've been kind of blogging about it, is they don't want to use any more monetary bullets right now. You know what? They'll take the muddling along. It's not awful. They'll take it. But the big problem is they need some politicians to start making some fiscal decisions, a la like the guys in Wisconsin. Hey, everybody's got to, pay up a little bit because we're going broke. They got to do it. The Greeks have to vote and say we're in or we're out. They've got to wait for these things to happen. There's no way he's blowing his wad before that vote comes up, because basically that's putting a referendum on the euro in general. So we're going to sit here, and every time anybody breathes, the whole reason we had this rally in the first place was we thought, oh, there might be some easing sometime soon. No chance until after the election. So I think that's why we could pull the air out of this bad boy, without too much trouble. And, let's say, think of this scenario. The Greeks are like, well, maybe we don't want to become like a fourth world country, and we'll actually just stay on this and we'll do these reform stuff and see how it works, because that's what the people are going to vote that party and that are going to keep the majority. And then all of a sudden everybody's like, well, I guess the apocalypse isn't on us because we have this fiscal rectitude going on, and we could be back to 1360 on the S&P 500 in like 3 days. There you go. That's my.
Now I'm ambivalent about those AUG 400 puts in the S. I don't know if I want to buy them or sell them. Who knows?
Right. Oh, we have a market.
There we go. We have a two-sided market now. Buy them, sell them. No, wait. But yeah, Sean, of course, on the last show, I remember you mentioned in the Around the Block segment, you were paying a keen eye here for good old Uncle Ben. Did he meet your expectations? Did he disappoint you? What did you think of Uncle Ben today?
Uncle Ben was about as good as a skeleton. I'm going to have to agree with Andrew. I think he's pretty much sitting back, doesn't want to say the wrong thing or get any hopes up. Pretty much wait for the other countries to settle their differences first. And if that affects us in any way at all, he may take some action if possible. But if you read a few things today, people are hoping that Germany and France may bail out the Eurozone. And now it just comes out an article late today that they don't even have the finances to do it. So back to what Andrew said, I completely agree with you. Big Ben really isn't going to do much. Obviously, he said it today, if really need be, and I think he's going to wait for other countries first. So if something does drastically go wrong, he could always point his finger elsewhere instead of himself.
You have to love any system where we create this essentially independent entity in the Fed, but yet have them still so tied to the political system that, of course, they are essentially useless for 1 year out of every 4 because they're terrified to do anything that may be seen as promoting one party or the other. So we have this. It is a bizarre system we've created for ourselves, only in America, as they like to say. Of course, looking beyond our shores today, there was some interesting news that gave the market a bit of a boost this morning. Of course, it came out of China, where they cut essentially their benchmark lending rate for the first time in about 4 years. So that was a big driver of some of the early gains we saw in the market, particularly a lot of names that do a lot of heavy lifting over in China, like Caterpillar and others, were really strongly up in the early part of the session based on that news. And it was an interesting move from China saying, hey, we're going to get the ball rolling here if no one else will, and start cutting, because I think a lot of people have said for a while that needed to be done. And so China saying, well, if Big Ben will do nothing, then we shall dive in and cut our rates here and let the world kind of follow in our lead for a change. So that was one of the few interesting developments coming on overseas. Of course, everyone's fixated on Europe still, and there was some spark of hope coming out of Spain today. They raised about $2.5 billion in worth of bonds today, so that at least showed some ray of light for that part of the world. Of course, we still have no idea what's going on in Euroland with the side of Saganaki, a.k.a. Greece. We'll have to wait and see. It seems like every weekend is the same story. Wait for Greece. Wait for Greece.
We only have one more. This one, and then we have Sunday elections next week. So
that's true. Then what will we talk about on these 0.0 days?
Well, we might actually talk about some stocks moving again, instead of just, some interesting stuff. I did see the. Okay, go ahead, Mark. I'm sorry, but we are sitting here in this holding pattern until we aren't, and there's no trade. That's the hardest part.
The only trade these days seems to be in vol, where the VIX has had a bit of a range, the VIX cash at least, trending up towards 30 and then back down to the low 20s again. So if you were playing in and out of VIX, then at least you've had something to do on these 0.0 days in the old market. Are you guys still leaning towards those long time spreads, buying far? I believe it was July, selling front month.
Yep. Actually, that's worked well. I don't have any complaints about that.
Yeah, 0.0 a couple days in a row. That'll work pretty well for those long time spreads. That's about as good as it possibly could get.
The thing, though, is I'm going to hold the strangle all the way through the June cycle and close my eyes just to left, like it's been financed. I've got it now, or mostly financed. So I'm just going to close my eyes and do an ostrich, and then wait until the end of June to see where the market is.
Well, if you did that most of this week, you did all right, because like we said, you had 2 days where literally the S&P was unch. So from a long time spread perspective, really couldn't work out too much better than that, at least from you're not, unless you were scrambling to hedge on some of the exacerbated parts of the move intraday.
Right.
But I'm guessing you weren't.
Iron Fly guy's doing okay, right now. Well, because there is. If you keep it intraday and you keep it pretty tight, I think you could do okay, and not get not get too crazy. So it's just a market you don't have. It's just not a great market to do anything big. Bull markets are great because you can do stuff bigger in them, or even in a bear market because at least everything's going to hell in a handbasket. This one is it's a very do everything small and muddle through. We'll just call this the muddle market.
You mentioned one of my favorite positions, the old iron fly, and I think we'll get to that a little bit later in our listener mail section, how that is an interesting position for these types of markets. And Sean, I know you guys over at OX love to watch the commodities and the old metals and everything else. What was catching your eye from a commodity perspective today? Of course, gold and the metals seem to be taking it on the chin for most of the day today.
Yeah, they did not really like what Big Ben had to say at all. But that did close off the lows. August gold, I believe, was all the way down around 1580. Did jump up to around 1592 right now, so was off its lows, but still 42, down 42 and some change is not a very good day for the longs.
No, we actually saw gold-wise yesterday. We pulled it up in the pit report. Implied volatility in the GLD actually looked pretty cheap going into this Bernanke. We had a couple of our clients mentioned it, and the just for anybody scoring at home going into the Bernanke, the June weekly 158.59 strangle was trading for less than $2 on what's today, Thursday. So it was yesterday on Wednesday, and today that little strangle is 345 bid. So they didn't price. They kept. They've been keeping the vol pretty cheap in the June cycle, going ahead of, because everybody's basically look at this like June July skew in the gold in the GLD for volatility. They are marking the June prior to the election down into the 17-18 range, and it's like 3-4 points cheaper than basically after the election. So I don't think that's really a short time spread candidate, because it's sort of an event. But you can pick up the June and any movement in gold pretty cheap. So I think actually the implied volatility in gold relative to movement is, it ain't too expensive. And that almost any pronouncement or anything comes out, the GLD's, up or down $2 or $3. So I think it hasn't been a bad purchase. Let's just call it that.
Yeah, that strangle certainly seems to have been substantially underpriced going into Big Ben. It's a shame that Uncle Mike couldn't join us on the show today, because I really want to know what the BBI was for a day like today, because we all know Uncle Mike loves his Apple, but his other big holdings are, of course, gold and GLD and SLV. So I'm sure the BBI was quite low today, and that probably played into why he couldn't make it on the show today. He's probably still rolling his calls and his puts.
He was way too busy.
Yes, far too busy. I don't even want to go near the St. Charles office today, see how many bottles there are lined up against the wall over there for poor old Uncle Mike. A grotesque image, of course, and listeners, I'm sure.
Ain't full of beer.
Yeah. So, Sean, I'm sorry I cut you off. What were you going to say there?
Yeah, Andrew nailed the GLD on the head. not including today, but if you go back a week and up until yesterday's close, the GLD was up $11. Now, obviously, it sold off today, but if you go back to May 30th to yesterday's close, that was an $11 upside swing in 1 week. That's on the GLD stock itself. Not
right. So there's the gold is, it's actually in a touchy spot. Same thing like everything else. Are we going to ease our way out of this and print money and then people are going to just jump into it, or are we actually not going to have to print any more money and just let things roll? And I don't think that's great for gold. I don't think it's going to cause it to crash, but I don't think that's gold bugville either. So
no, it's in a tough spot. I mean, I think a lot of people are thinking right where it is right now, 1550 range. Are we going 1700 or are we going down to 1300?
Yeah, that's why I like again, this is one time where buying juice in gold makes sense to me, but that's just me.
One place where you may or may not, depending on your point of view, want to buy some juice right now is Facebook. I'm just looking here at these options while we're pulling up GLD and SLV as well, and there's a lot of ATM front month, or actually I'm sorry, July. This is trading at about 60 handle in terms of vol perspective. So that July straddle trading it's about 450 or so, 430, 440 around that range. So some interesting. Are you guys leaning into any time spreads in Facebook right now, Andrew? Are you guys staying away after the success of the synthetic Facebook, aka Zynga?
Yeah, I like sold a Condor, and for this, for actually legged into it for 15 cents a risk. So we're just we're sort of waiting. It's slightly below the low strike, so not much we can do with it at this point. But I have a feeling Facebook's just kind of not like everything else. I think the hype as far as the stock and the company is gone. It actually feels like it's really weird, but it feels kind of like dead money for a while, just like all the social networkers. I don't think they're already kind of at the bottom, like Zynga's $6. I mean, it could go lower, sure, but they feel kind of like dead money, and they almost feel like things you want to almost buy right. I don't think I'd buy right Facebook necessarily, but it's just harder. I think, these companies are still eking out some cash. It's sort of getting down. I feel like they're getting down toward the bottom for companies that still have plenty of explosive growth potential. But right now, you're not seeing it, right? The stocks are just getting hammered. I'm reading stuff in the Wall Street Journal. It's the most ridiculous thing ever. People are complaining that they lost money on their Facebook shares. It's like, you buy a stock, it can go down. Since when?
Well, isn't that what Tim said on the show a couple weeks ago? He said people were calling up saying, "Get me in at any price. This is a long-term hold for me," and then calling back that same day saying, "Get me out, get me out,
get me out at any price. I want out of this."
I believe it was about 5 minutes later.
Oh yeah, I'm sure, Sean, you saw a lot of that on the desk that day as well. A lot of flip-flopping on long-term hold to, for the love of God, this isn't Netscape. This isn't what I was promised. Get me out.
Get me out. Yeah, it's because that those guys fully priced this stuff and they sold a heck of a lot of stock. So I think he did what was best for his company, and in 10 years it'll probably be $45, and it'll be trading like Apple at a 10 PE and be have $40 million billion a year in revenue or something. But
you're a little more optimistic than some of the other naysayers out there who say Facebook's either going to be $500 stock or it's going to be zero. There's very little in between in those predictions. Speaking at the bottom, look at your Zynga there, trading 6 handle today again. Wow,
I know. I wrote it today.
You can leg into these. We were talking about bullish risk reversals on Zynga before. You can leg into that 6-7 risk reversal in June for dime 15 cents credit. Put on a nice bullish upside play in Zynga for credit. And if you don't like it, by all means, pick up some Zynga down at the bottom of its range. Interesting stuff going on in Zynga.
That's basically what I did today.
Oh yeah.
We'll see what happens.
Another.
I was definitely wrong it. I was right it. Then I was wrong it. Now hopefully I'll be right it again.
Third time or maybe the fourth time in your case is the charm.
Is the charm.
All right, we'll talk about risk reversals a little bit more later in the show as well. But now it's time to dive right into the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for The Odd Block.
All right, and welcome to the Odd Block. This is, of course, the portion of the show where we break down some of the interesting activity that's been catching our eye today. And we have a couple interesting names to talk to you about today, including a repeat offender in the old Odd Block. This is good old Lululemon, ticker symbol LULU. And longtime listeners will know we've discussed this one a few times in the past on the old Odd Block. This is, of course, the maker of athletic apparel, primarily aimed at women and yoga practitioners and things like that. Of course, they will claim they are a unisex maker of athletic apparel. But this one has popped up before on the old Odd Block, and today it was another hectic day in Lulu. We saw this name usually does about 18,000 contracts a day. They did about 74,000 today, so a heavy, heavy day in Lulu, of course. This is, of course, as a result of their earnings, which came out today before the open, and they were down about nearly 9% on the day to 63.84. So as you can imagine, those earnings not exactly stellar. I guess the ladies apparel / yoga market not exactly strong these days. But what we have to talk about here is actually a fortuitous trade, a well-timed trade, if you will, from an options perspective at least. I don't know how they did on the underlying if they had some, but probably not as well. But we saw a couple days ago actually a 10,000 lot of the June 67 half put spreads went up, not tied to stock, so it was a naked put spread going up. They picked it up for about $1.30, 10,000 times. And of course, as of noon today, or about 1 o'clock today, that spread was trading nearly $4, so well over about 300% increase in what they paid for that. So a very timely hedge and or spec going up in Lululemon. Of course, looking at that volume today, we saw about 2,000 contracts going up on those strikes. So that put spread is still open. So this guy may be thinking that there's a little bit more downside to be left here in Lulu before he unwinds it. Nonetheless, an interesting and well-timed trade going up here in Lulu. We don't talk about too many of those on the Odd Block today. We usually, or on the Odd Block in general, we usually talk about people coming in and picking up, let's say, a lot of upside before a name that explodes to the downside. This one actually had the right end of the spectrum, at least if he was just naked specking. If he was holding underlying, then he's probably seen better days overall, but not as bad as it could have been, of course. Moving on here to a newcomer in the old Odd Block, we have GDX. This is the Market Vectors Gold Miners ETF. They closed today at about $46, down about 3.5%. This is the name that, of course, provides exposure to publicly trading gold mining names. And we saw a big put spread coming in on this one, looking for someone probably to spec on some downside here in GDX. Of course, this name has gained about 21% over the past 3 weeks. Of course, today, not exactly the best day for GDX, given what we talked about earlier in the show with the prices of gold and silver taking a beating after Bernanke talking this afternoon. And of course, this is a name that does about 80,000 contracts a day. It did about double that, about 160,000 today. And the biggest trade was someone coming in and picking up about 20,000 of the July 44 puts, selling the same number down at the July 38 handle, all for a net of $1.20 per contract. This all went up exactly mid-market, so it's a little bit difficult to tell exactly what this trader was up to, but it seems like they were purchasing this spread as a bit of a downside spec. If so, that seemed to be a fortuitous trade going into today's action. Of course, this thing's really got to take a gap down to settle well south of, settle at around the 38 handle for this thing to really see the full payoff. But still, nonetheless, today's action given this trader putting up 40,000 contracts in GDX, giving him a nice pat on the back. 2 well-timed trades so far here, Andrew, in the Odd Block. That might be a record
Imagine
for us.
that.
And last up here on the old odd block, we have people picking up some bullish positions in XHB, which is the Spider S&P Homebuilders ETF. This one closed at about 20 even today, essentially unched on the day. This is the name that does about 22,000 contracts a day. They did 52,000 today. So a big day for XHB as well. This one pretty much holds positions in names like Home Depot, Bed Bath & Beyond, Toll Brothers, and others. By the way, I love Toll Brothers. So for me, whenever I see that name, I always instinctively think, for whatever reason, remember those old Keebler elves and the Toll House cookies? I always think of them first instead of a home building company. So I always think of Toll Brothers should be in perhaps the confectionery segment or the baked goods segment as opposed to the Home Brothers. But given your lack of laughs, I think I'm alone on that one there.
Well, I think of Toll House cookies, actually.
Exactly. That's what then they were the Keebler elves, weren't they? Wasn't it the same thing? Yeah.
Toll House the Toll House cookies are what you make when you buy like those bag of Hershey's chocolates, I think.
Oh, so maybe I'm mixing my childhood cookie metaphors, I suppose.
Yeah, Toll House cookies were the things your mother made you, maybe, or maybe she just bought you the Keebler Elves cookies instead and just told you they were Toll House cookies.
Well, regardless of what cookies my mom made me, we saw a lot of activity today on the June 21s. Those calls lighting up with more than 30,000 contracts changing hands against an OI of just 20,000. So a lot of opening new paper coming in. The biggest chunk of that was in a block of about 21,500 calls being picked up outright for 18 cents. So a substantial bullish streak here in these June 21s. About 32,000 total on the day going up on that strike. Andrew, that's about your size. Was that you legging into? I don't see the corresponding other side of that time spread though.
Buying calls in these ETFs are a rough proposition.
It's a crapshoot. Yeah, it's even more of a crapshoot than it normally is when you're just buying upside.
I thought I had a nice play in one of these, and they got just. I think these are great like time spreading stocks names. I don't think they make great outright buys because they just are so pokey. Although the HXB I'm just looking at is just closing out because I think the home building sector, that whole group, is will probably end up being one of the big winners over the next year or so. You got to love it when the housing market is still at all-time cheap and you can't rent a house. So, eventually you would think things would get a little better for these stocks. But this name right now is only from the beginning of the year, it's only up about, 80 cents. Let's see I don't think it's not an awful play. I just hate outright buying out of the money calls on these things. They're 18 cents, and what are we expiring June? That's a tough one.
Yeah. Of course, listeners, I was joking. That type of trade is probably the exact opposite of the type of trade Andrew will typically discuss here on the show.
Sorry, dude.
So I was trying to lead him and bait him a little bit. Didn't take the bait, but no. Yes.
I was just being an idiot. I go, why would I want to buy this?
Why would I want to buy this upside in this nonsense ETF that's got a couple of weeks to go? That doesn't sound like a very good trade at all, Mark. I don't understand what you're saying to me. All right, and with that bit of irony, perhaps misplaced, we shall close out the old odd block and dive right into the Express Block.
The Express Block, brought to you by Options Express. Options Express lets you trade where and when you want for every level of trading. From advanced charting, free daily trading ideas, and free educational resources, Options Express is the online broker for all traders. Best of all, Options Express allows you to trade stocks, options, and futures all in a single account on powerful yet easy-to-use trading platforms, including mobile devices. Visit optionsexpress.com/OXradio for your free account. Options Express is a member of FINRA, SIPC, and NFA.
All right, and listeners, that theme means it's time for the Express Block, the portion of the show where I get to surrender the reins to the boys over on the OX hot seat. And today's victim is none other than good old Sean Fitzgerald. Sean, What were you seeing? What was catching your eye? What was going on behind the curtains in the land of OX today?
Well, hate to keep beating on old Facebook today, but I don't know if anybody noticed that volume. We had 26 million shares today, which was about a third of yesterday's and the least traded day since its existence on the 18th of May. So I think more and more people are already divorced from Facebook if they haven't already sold their shares.
Yeah, from an options perspective, it was fairly weak, too. I mean, 180,000 contracts, if you can ever call that weak. From Facebook, that is pretty weak. They've been averaging about 270,000 a day, so they were off substantially, about 90,000 contracts from their average today. So maybe the bloom is off the rose finally from a volume perspective in Facebook.
Yeah, especially with the New York Stock Exchange volume was up 10% today, above the 3-month average, and the Nasdaq was up 5% above their 3-month average. However, that Facebook stock is losing its love. I mean, I think even the day traders are starting to pull out of it and finding other ways to bang a buck around.
Yeah, it's not too much fun to day trade when you can't catch a bid to save your life.
Exactly.
It's pretty one-sided paper, I'd imagine, and pretty one-sided trading for the most part in this name. This is kind of the reverse of the Apple problem we've been discussing for a long time on the show. That name, until recently, could do nothing but catch bids, and this one is on the reverse side of that spectrum, where they can get nothing but be hit in the face with offers repeatedly.
Yeah. We also got once that story leaked out, or whether it's true, or actually I think it's true, but Starbucks coming out with the K-Cups for the Green Mountain machine. I believe that story came out earlier this morning.
Oh, good old Green Mountain. We love that one.
They're going to be actually, Dunkin' Donuts, and I know a few other coffee companies. I believe that's Seattle Roasters. They also provide the K-Cups, but it's kind of odd to see Starbucks. You think they're like one of those places, or like a Goldman Sachs, kind of want to do their own thing, don't want to do what everybody else does. But quarterly, they may be doing this possibly Monday. Start having cups in their stores. You can walk on into the grocery store and just pop them right into that Green Mountain machine. But then again, the CEO came on later on and said maybe not till the fall. So you got a CEO saying we're going to do this in the fall, and some analysts saying this coming Monday.
Yeah, which one do you believe? Sean, I know you're new to the show, but we tend to take a very dim view of analysts here on the option block. So we can just clue you in on that right now, so you can join us in the analyst bashing whenever you care to.
Very similar to the weatherman. But when that news did come out, I was getting quite a few calls early on. That stock was, right around 53.40, 53.50 when that news broke out about those K-Cups. Started getting some calls for some June 55s and even up to the June 57.5 calls with 6 days of time value left. People were paying up a little bit for them, and then the stock did sell off after its high. And actually did get some calls.
The analysts strike again, erasing value wherever they look.
Exactly. And then we went down to quite a bit of, not too much volume, but did do some on the July 55s as well, and into the 57.5s. And then a couple orders in October took on. I did see a few different traders. I don't know if this was a publisher who put out a recommendation, but went as far out as buying some October 60s.
Yeah, I'm looking here. There's about 1,100 of the Oct 60s went up. So was that you? Yeah. Was that you, Sean? Was that you putting up all that?
That
paper?
Was me. All 1,088 of them. So I thought that was kind of interesting that Starbucks would help out a company like GMCR, or maybe they're not really helping them out. But figured they would usually either come out with a machine of their own, but looks like they're going to be during those grocery stores, and you can just walk into the Starbucks store itself and pick up those K-Cups and pop them into your little Green Mountain coffee machine.
Yeah, Starbucks is a weird beast these days. They operate through a lot more middlemen than you might think. I was talking to my wife the other day about, and we got on the subject of her office and their coffee for some reason, and she was talking about how they get Starbucks as well, but they get it through some intermediary as well, and they bring it along with a bunch of other things. So you can get Starbucks these days in a lot of different ways, not necessarily from the company itself, and I'm sure that's part of their grand plan to sneak their tendrils slowly and surely into every fabric of our lives. You can't escape Starbucks coffee anywhere you go, even in your home coffee machine.
That's true. And yeah, I think it was 3, 4, 5 days ago they bought that bakery company out as well. So it seems like they're dipping their hands in a couple more pots that you didn't think they would be about 3 or 4 months ago.
Yeah, a lot of interesting stuff going on in S-Bucks. I have one up on you, Andrew, and this one is that I used to be out in the IBM pit and on the SIBO, where, of course, S-Bucks does trade over there. So I had this one in my pit, unless you had it in one of your random, perhaps
I remember
Philly
that
pits.
actually when it IPO'd.
Oh, yeah? That was a little bit before my time, but at least from an options perspective. But
yeah, when they listed that thing. Yeah, I was, because I was in a DPM actually right around that for a while.
What was that?
Kind of a hot stock
was
for
that
a while.
1972? Is that what that was?
No, I think it was like 94, 5.
Yeah, I came
Somewhere
out
around
in the SIBO in the mid-'90s, so I missed it by a couple of years, the good days.
Yes, they were all good days.
Speaking of good days, anything else catch your eye over there, Sean, before we dive right into our listener mail segment?
We can dive on into the listener mail section. Pretty much covered what I did see today. Like we talked about earlier, another 0.0 day on the SPX. And I think a lot of people may be paying attention until tomorrow and wondering if we're going to have a similar Friday, or maybe not exactly similar, but a hard sell-off into the weekend because of the constant woes over in Europe.
Yeah, we had that bit of a dead cat bounce yesterday. We'll see if they cut the legs out from under it tomorrow. If I had to guess, I wouldn't be exactly loading up on upside here like some of our friends in the odd block going into the weekend today. But that is going to do it for the Old Express block, and now we're going to dive into the listener mail block.
Now it's time to empty the mailbag and see what our listeners have to say. It's the mail block.
All right, and welcome to the listener mail block. This is, of course, the portion of the show where you, the listener, gets a chance to chime in and voice your opinions and ask your questions and essentially slam the old rock lobster from Maine whenever possible. But first question here comes in from our forum on the old optionsinsider.com. And it comes from a listener who goes by the handle optionsvoodoo. I like that. That's a good one. And he writes, when do you think daily options will become available, and what impact do you think they will have on the industry? Also, what particular strategies do you see coming out of these daily contracts that vary from some of the current strategies? Thanks, Options Voodoo. Well, I'll take the first part of that first. And when do we think these daily options will become available? And it seems like the options industry, for the most part, has the ability to process one big new product at a time. That's what everyone kind of gets excited about and wraps their tendrils around. And that product right now apparently is the minis. When I was down at the Options Industry Conference in New Orleans a few weeks ago, all anyone could talk about was the concept of mini, essentially 1/10 size Apple contracts, and how that was going to solve all of the ills of the options industry and solve all the volume problems and allow all these people out there right now who can't touch Apple because it essentially requires 6 figures to really trade it actively from an options perspective. These people who can't touch these options because it's just too expensive, that will really open the floodgates to them. But the problem with that is there are 2 competing proposals, I believe, from NYSE Arca and ISE, and so those 2 have to be hammered out and hashed out, and there really has to be one standard they're going to set for that. So while that debate is raging, I don't see any real movement happening on the dailies. And quite frankly, I don't see a groundswell of support for dailies. There's certainly a contingent in the options industry that is afraid of being labeled as gambling. And, options obviously have a pretty bad reputation to begin with. Most people look at them in the broad investing public. They see options as risk additive, not risk mitigating tools. And so they think of options as just being a very, very dangerous place to come play. So the notion of adding daily contracts, which could really be perceived as, or I should say, are very difficult to sell from a hedging perspective, unless you want that really immediate near-term hedge. They really start to cross that line over into potentially being seen as gambling type products. And I know a lot of the exchange heads that I've talked to and the brokerage heads are really, really hesitant to dive into that realm because it is a type of product that just really tends to feed that negative perception of options. So in truth, I don't think dailies are going to come anytime soon. Certainly not before we see these minis coming out in things like Apple. And then in terms of what strategies do I see coming into these, that's another problem with these contracts, because if we've seen essentially just an explosion of premium selling in the weeklies, can you imagine what's going to happen in the dailies? I mean, you're going to see 1/10 of people buying these things, and the rest is just going to be an outright race as soon as the bell is open. I mean, you think the decay is bad in the weeklies? You're going to be able to literally see it come out in these dailies. So that's going to be an interesting race to sell these things. I don't know, Sean, Andrew, you guys might have a different opinion from me on these. What do you guys think?
Dailies are ridiculous. I mean, how you're going to open those? I mean, realistically, I would want to be a market maker in the dailies. Open a daily at 3 vol and just sell them at a penny. I mean, it's I don't really think that's really helping a whole lot. I mean, the weeklies are kind of already there, so I'm all for innovation and options, but I just think a daily really isn't going to solve a whole lot of problems.
Pension's got big enough of a problem.
Could get taken to the cleaners, it'll just be a huge mess. Oh, I sold these things at 25 cents. Now they're worth $5. I don't know if it's going to work. Expiration every day. I don't think it's
expiration every day. That sounds like a great idea for you, Sean, huh? Make your life very fun.
Yeah.
All the guys on the desk are going to be poking their eyes out with sharp sticks. Okay?
Imagine Penson. Penson can't handle everything as it is. Now they got to deal with this. I don't know. I think, Andrew, you pretty much nailed it. The spreads are just going to be very wide right away and just dry up by day's end. And not good for anyone.
I think the weeklies were a great invention. I think the dailies are taking like 5 tables. It's like taking 20 aspirins instead of just 2. Just sometimes you can overdo it. That's coming from a guy that likes to overdo it.
That is pretty much the most common industry perception on these products. But let me just say, I don't think they will never materialize. I think eventually we will see someone diving into the daily realm, because the weeklies have been so successful, and people will think short duration is the trend. They'll want to dive into it. So I do expect them to happen someday, but not anytime not anytime soon. Options voodoo, let's put it that way. So unfortunately, you won't have a chance, or maybe fortunately, depending on your point of view, you won't have a chance to implement some of those radical premium selling strategies as soon as the bell rings. Okay, and moving on to another question here. This one comes via email from Kyle Bongers. I don't know if that's a real name or a handle, but either way, I like it. It's pretty funny. I don't know where Kyle's writing from, but he writes, "Hello, crew. I was wondering if any of you have a bread and butter income type trade that you put on consistently with little regard to overall market conditions / bias, whether that be on a weekly or monthly basis, where the primary profit driver is theta decay. Also, in terms of viewing option skew, what products offer the best way to view and understand skew?" And Andrew, I can see you chomping at the bit on this one. So since I ran off at the mouth on the last one, I'll let you start off with this one.
Well, I'm just about to say, for Kyle's sake, he's lucky that Mark Sebastian wasn't here to throw the 80s.
Yeah.
The 80s.
I don't think he would appreciate the way that question was worded. Let's just say
he would lose his mind. Okay. Now, from Kyle's point of view, I agree with him. I would love to have an income type trade that always makes money no matter what the market does. I think that's a freaking great idea. I love that idea. The problem is the market doesn't let you do that. Also, there's no such thing as an income type trade. Okay? That is a misnomer. That's a bad thing for people to think about. It's like people think they're going to walk in and just get paid. Okay? You have to take some risk for that income. So what you have to do is you have positive theta trades. Now, a trade that works, I think, and actually in conditions now for shorter term trades are what I was talking about before, just this bread and butter iron butterflies that
the iron fly, my favorite of them all,
teach in the gold course, where you control some risk. The key to all those trades is you make some money and then you go and close the position. So the difference for conditional wise for me is how big you put it on. If you think the conditions are a little better, you add it's a little bigger than let's say you do your normal size. If conditions are a little sketchier, but there's a little bit of edge you see, maybe you just cut it down a little more. So what I generally do is I would change my size based on market condition, right? Going all the way to 0 if conditions don't warrant at all. And you know what? Having cash in your account not doing anything for a week is okay. It's okay. So in terms of viewing option skew, there's lots of products. You can look at stuff from, I don't know. Do you have anything else to say on I think the iron butterfly works for short term. And I think based on market activity, you kind of go out and you scale out the type of gamma you want to be short. So some trades, like an iron butterfly, I would say is kind of for retail vanilla style trade, has the most short gamma, high and high positive theta. And you break it down into kind of the double diagonals and time spread world. That's another one. Some of those have more of a delta, though, to get in on. Then you go to the kind of the iron condor style. But those are all trades that you should shape based on market condition. So if you don't look at market condition when you put a trade on, you're asking for trouble. Okay? That's the first thing I say. You never want to put a trade on with little regard to market condition. That is an insane prospect. I can't even be nice about that.
Yeah, that one. I thought that would get some gander up here on the show. That's why I wanted to include that one.
Sebastian his head would already be sticking in the ceiling by now.
Is that him chiming in with his little honking horn?
Yes, it is. Actually.
Wait, let me chime in on this one. Well said, Andrew. I think you hit the nail on the head for the most part, and I agree. Right, iron fly is my go-to spread for a lot of these types of scenarios, but of course there is no such thing as that infinite income all scenarios type trade. I wish there were. That would be a nice. That would make our jobs very simple here on this show. Hey, just do the XYZ trade.
Anybody anymore ever?
Yeah, exactly. Of course, it might put you out of business, but on the flip side, it would make your life very easy.
Right, I would just sip my ties on the beach in Maine and throw
collect the income
out of my pots, and I made another 20 grand today.
You just collect the income because it works in all environments.
Exactly.
Sounds like some of those late night infomercials. Make money in any market condition using options. Oh, and the second part of that question, that's a confusing one because if he means products or more strategies. If he means products, obviously there's things like the skew index, not exactly a tradable index, but it at least gives you an idea of how that works. I think he probably means more along the strategy lines, in which case, you have your bread and butter, 10 and 20% out of the money risk reversals that are probably the best way to see what's going on with skew and how that is unfolding in your underlying. So, if you don't know risk reversals.
And look at I would say look at anywhere like the 10 to 15 delta puts and calls in an index or an ETF and measure those and see how those things, just like Mark said, you look at the puts to the at the money to the calls each way. Because we call it an option pit, like the 3D view of skew. You've got you've got your put skew, your at the money volatility, and then your call skew. So you've got 3 pieces of skew to deal with. They all move. Amazingly, they can move all independently. So, but looking at it as a product, there's live vol, there's ORATs, I think iVolatility might have a skew product. I'm not sure. There isn't. I'll tell you what, though. There aren't any good ones that I think. Not as good as basically the prop stuff I used to use when I was in the SPX. Those work pretty good.
Nothing's really better than just doing those risk reversals yourself and seeing it yourself. That's pretty much the best way to do it.
And just pricing it and like sticking it in a spreadsheet every day and going, oh wow, this has really come in. This is really big. And we will tell you that I will give you a hint. Your iron fly works very much better on a flat skew than a steep skew. Just that's your that's your hint for the day.
There you go. That's your option pit gold course tip of the day.
It is.
All right.
So just because the volatility is relatively low does not necessarily mean it might make a great iron butterfly because you're going to get no credit for it. So
I'm not sure. I know the SIBO has that SKU index on the S&P. I believe they were talking about listing products on individual names like Apple and Amazon, things like that too. I'm not sure how much traction those have received since then, but you might be able to look at those too.
You know what's a nice thing actually is the VX Apple. Pull that chart of that thing up. That's the 30-day forward. That has been a mover. As far as, I don't know if they're going to list options or trade it, but I think they should trade a future on it. I think it would trade. I think they should list a VIX-style future on the Apple VIX right now. I think it would trade. So,
yeah, this thing's at quite the range.
You can just buy Apple stock and buy the future, in some sort of ratio.
All done. There's your any environment trade right there. There you go.
That's your trade.
Of course, you're not really getting the income on it.
Sell the crud out of the upside call.
There you go. There's the income portion. Now we're all set. Now we're done. All right. And with that bit of nonsense, we're going to close out the old listener mail segment. Thank you to all of you, or I should say specifically, thank you to Kyle Bongers and Options Voodoo for writing in today. If you want to join Kyle and Mr. Voodoo, then by all means, surf on over to theoptionsinsider.com. Post in our forum. You can hit us up via Twitter, twitter.com/options, or on Facebook, just search for Options Insider and post your questions there. A lot of ways to get in touch with us over here at the old Option Block. But now we're going to close out the listener mailbag for this week and dive right into an abbreviated Around the Block segment.
Around the Block.
All right, and welcome to Around the Block. This is, of course, the portion of the show where we discuss what's on our horizons, and I think most of you listeners who've been paying attention throughout most of the show know what's pretty much on our horizons for the next few weeks, as, of course, the tasty, delicious gyros coming out of Greece and how that vote will unfold in about a week and a half or so. And then we had Big Ben on our radar. He kind of really disappointed everyone with just a resounding meh for today. So not a whole heck of a lot to watch aside from those two, because everyone's keeping their powder dry until the big bang out of Greece, whichever way it may roll. Anything else you two are really watching, Sean and or Andrew?
Well, I just pretty much want to get back to the whole Eurozone thing. I mean, obviously we got countries over there. Some are going to default. Some are going to leave. I mean, the potential losses are, increasing rapidly, more and more as countries are defaulting or eventually may leave that Eurozone. However, the greater the delay of this, or the default or departure, the larger the losses on the exposure to countries like Germany or France. So, why wait 3 weeks? Why not just get this over with? Everybody's sitting around.
For 2 years, my man.
Let's
get it over with.
And who knows? Maybe in 3 weeks they get some kind of delay, and then we wait another month or so. But I think the bottom line here is that there's going to be large losses. There's going to be defaults. Countries are leaving. But as this prolongs, the exposure is just going to continue to increase with loss over loss.
You know, what's interesting about this is, this is kind of somewhat analogous to what we saw last year going into the default debate. Only a little bit different in that going into that scenario, we saw everyone and their mother leaning short VIX coming out of that because they thought, regardless of what happened, the vol was going to come in aggressively. Of course, we all know what happened. The downgrade followed soon after, and VIX went off to the races, and everyone who faded VIX to the downside essentially had to roll forever, or they pretty much got rolled over. And we're not seeing so much of that this time. Andrew, maybe you are. I don't know, but I haven't seen too much of people really loading up to the downside in VIX thinking whatever goes on outside of Greece, once that's over, we're pretty much drifting a little bit south. It seems like people are really keeping their powder dry in this one. Is that what you're seeing as well?
I think so. Yeah, because I was just pulling up the VIX volatility again. I don't think it's still pretty. Go. Come on. Give me my numbers. It's 100. So it's not at the high end of the range. It's not at the very low end of the range. It's I would say it's mid-high, not real high. So I don't think they're coming in and buying a bunch of puts in the VIX quite yet. But what's interesting is I thought the sell-off was it's almost like the sell-off was overdone if we're still moving. That's what I'm I wouldn't be surprised if I see the VIX uptick another couple of handles over the next couple of days, as we kind of approach, next week, like kind of a creepy crawly tick-tock up.
Yeah, people start picking up some insurance just in case that euro is not exactly too tasty and or delicious. But I'm making myself hungry doing this show. But
I know, I'm really hungry now.
Since we are approaching dinner time, it is indeed time to call this one. That is going to do it for this episode of the Option Block. But of course, before we go, I want to thank my cohorts, my partners in crime, for joining me on the show today. Starting off with you, sir, Mr. Rock Lobster. What is coming up in the land of the pit that may interest and or intrigue our listening audience?
We have our baseball and trading extravaganza next week in Chicago. I think we might have a spot left. I don't know if it's full though. Where we're going to do live trading. Mark and I are going to set up some mock trading sessions so people can start getting inside the head of these liquidity providers.
Are you going to have screens at the rooftop at Wrigley?
We're going to do it in the KYO office. So.
Oh, really?
Yeah. And we're going to have cubbies, and we're going to go to the excellent Italian Village in downtown Chicago. Actually, it's one of our clients is the owner of that place. A little plug there for him. And little known fact, that was my first bottle of wine purchased in Chicago was at that restaurant when I first moved there as a new trader many moons ago.
Everyone went there the first time because that back in the day was the only restaurant open past like 3 o'clock in the Loop. So if you wanted to eat dinner in the Loop, it was pretty much Italian Village, and that was it.
That was it. I think they had a lock on it. And then we have our weekly seminar next week on selling weeklies. Actually, last week was buying weeklies, and this next one will be strategies for selling. So trying to give people both sides of the coin as we try to do, as much as some people might yell at us for telling people to buy options sometimes, but hey, you know what? The market moves sometimes. I know it's a shocker, but it does.
All right.
And that's really what we got going.
All right. Thank you for that, Mr. Rock Lobster, and of course, our newcomer, Mr. Sean Fitzgerald. First off, congratulations on completing your first full week on the old Option Block All-Star panel. I think you acquitted yourself admirably, sir. And before we go, what do you have coming up in the land of OX you want to let our listeners know about?
I want to let the listeners know that OX has put together what we're calling a earnings calendar chart. And what it's going to do is, if you, say, pull up Google into a chart, click on the old earnings button, it will show you the last 8 quarters of earnings and what the stock did the following business day based upon percentage and price-wise. So you can actually insert options in there, certain strike prices and months, and it will show you whether they went up maybe 13%, down 4%, or up $2 or down $2, depending upon if you are in the options or just the stock itself. This obviously just doesn't work for Google. That was my example. That works for any stock that trades options. It's in beta testing now and should be available in about a month.
Well, that's great. I know a lot of our listeners who fall into that degenerate premium selling side of the fence will certainly find that useful as they're planning their strategies prior to earnings, so they know they're not doing something that's probably going to get them run over, at least with a high probability of getting run over. So that's an interesting development over there at OX. Thank you for that, Sean. And of course, that is going to do it for this episode. But before we go, we also want to thank all of you out there for downloading and streaming and subscribing to this program and making it such a success. And we'll see you next time right here on the Option Block.
Become a part of the Option Block. Just visit www.theoptionsinsider.com/forum to post a question for the hosts. You can also submit questions to twitter.com/optionblock or leave a voicemail at 312-544-9356. Make it interesting and your question just might make it on the air. The Options Block is property of the Options Insider Incorporated. All rights reserved. preceding program was a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com/radio or search for Options Insider Radio in iTunes.